Hello guys, hope you're all having a great day. So I know most of you really have hard time when you're analyzing charts, like even you fail to get like really the simplest trades in the market. But today I want to teach you a very simple strategy, guys. This is very simple and it's all about market structure and price action. So the first thing is, make sure to subscribe to this channel, turn on the notification bell so that you never miss out whenever I post a video, guys. So, for the time that I've been in trading in the forex market, guys, I've analyzed that most of the times we as traders we neglect like the simplest things in the market, and then we often go do other things, or sometimes even we trade off like what we see in the market, not what we studied. So, but today I want to teach you this, guys. So, when you're trying to find trades in the market, guys, you should always analyze of the market structure. So market structure has four components. We have the uptrend market, which moves in this way. It moves in this way, as you can see. That is the uptrend market. Then we have the consolidation. We have the downtrend market, which moves in this way, as you can see, just like this. So then we have what we call the ranging market, which moves like this, just like this. Then we have the last market, which is the consolidation market. So the consolidation market is the one that we don't trade, we just mark it out. So the consolidation market is the one that moves like this, like this. So this is consolidation market. We often don't trade here because there is too much noise. Most of the cases orders are being compiled so that we can see either a breakout to the upper side or a retest. So as you can see right here, so this is the uptrend market, downtrend market, sideways market or ranging market, then the consolidation market. So now today I want to teach you about the ranging market, because to be honest, I've seen traders really struggling, even in this season where we see more of the ranging market. So let me teach you this market here. So we are going to delete this, and this one. So how do you trade this type of market? So the first thing is, whenever you're trading this type of market, you just have to draw out your support and resistance. So your support and resistance, you come and choose your horizontal line like this. You put it there like that. Then you also put it down here. Down here. So here we have two lines, traders. We have two lines, as you can see. We are going to make this red because this is a resistance. So resistance is represented by red. Then resistance, support then is represented by green. So we make this green like this, and then we make the size bigger so that we can have clear. So traders, whenever we have a type of market like this is one of the components of the forex market. So what does this mean? Whenever we have a resistance line and the support, the resistance line is a level where we see sellers come into the market, and the reason for that is because whenever buyers try and shoot up with momentum, they're always going to find resistance breaking a certain level. So as you can see, this is a resistance line. So whenever traders fail to break, or like when we see traders going in up with much momentum and then we see over a sudden price reversing, it means the level where price stopped going up and then started coming down, that is called a resistance line. So we mark it out, and the reason why we mark it out, because in future price can sometimes come back to that level and then fail to break out. So meaning that is a resistance line. Then support level is a level where price finds support, or what we call momentum to shoot back to the upper side. So since price has failed to break here, it has to come back down here and try and see if it can even come back, like break this line and then go down. But in most of the cases, it just bounces off and then goes back up here, so that you can see if it can break this. So this type of market happens like all the time, like price just keeps on bouncing in between. That's why we call this a ranging market. So how do we trade in the ranging market? Whenever price comes back to the upper line, we sell off and then buy off here. And the reason why we're doing this, we are doing this as we're waiting for price to break out, and we always have to have confirmations. One of the best confirmations is always to see candlestick patterns that show reversal. So when my price is currently here, and then you see a reversal candle, let's say a bullish, let's say bearish engulfing candle, it means price is going to reverse and come back down here. Same thing here, when we see a reversal pattern or a one candle pattern like we see a reversal candle pattern like a bullish engulfing candle, that means price is going to reverse and come back up here. So the process just keeps on happening, traders. So for you just have to identify the support and resistance, and then know about the candle confirmation, and then you always take your trade in the smaller time frames, so that you can have a good entry whenever price comes back there. But as we are trading this type of market, we are waiting for price to break out and retest. So the breakout can either happen up here like this, and then price comes back to retest and then go back up like that, or we can have price just breaking like this, retesting, and then coming back like this, as I'm going to show you on the live market. So guys, this is basically how markets move in the ranging market. And as I said, currently we have these types of market in our current market. So let's look at this first pair. So this is US 30. This is US 30. So when someone comes onto a market like this, there will be a discouraged. Market looks sad and all that. But again, guys, the first thing, you go to the daily time frame and look out for the highest point in the market and lowest point in the market, as you can see. So traders, as you can see, this is our nice market, as you can see right here. So most of the cases when traders are trying to trade the ranging market, they often use what we call horizontal lines. These ones, they often use these ones to trade in the market. So we don't like to use these ones. If you want to trade like the pros, guys, you have to use the rectangle tool. The rectangle tool helps you to cover up at least more ground. So you're going to select this. Another thing I didn't tell you, whenever you are identifying the ranging market, we like to identify it on the bigger time frame. So the same way we like to identify downtrend and uptrend market, the same way we like to identify this market, as you can see. So this is my market, as you can see. I've drawn it, and the reason why I've used these lines, because sometimes when you use a single line, price can tend to just cross over your line, you see, just like this. So at least when you have this is more confirmation. So traders, before even I go into the smaller time frame and show you the confirmation, so as I told you, ranging market is the one that price bounces in between, and then you're going to buy, sell, as you can see right here. So if you have to take a trade here, this is how you take your trade. So you're taking long position. So you take your long position there, put your stop loss above here, as you can see, and then put your stop loss just below, just there, as you can see. So then you let your price play. As you can see, price reaches the upper part, as you can see. It comes back down here, as you can see. Now here you take your sell position, as you can see, price it's just going to be bouncing in between. For you, you just have to wait for price to come here. So let's see our price finish. And remember, I said what we want is a breakout. What we want in the end is a breakout, as you can see. So let price play. As you can see, traders, price is bouncing in between, as you can see, in between. Then it comes down, then back, then so now, as you can see, traders, so how many chances would we have? The first chance was to buy from here, then again sell from here, buy from here, sell again from here, and then maybe also buy from here, since price had given us this impulsive move. Now let's go to the smaller time frame and we see the entries on this same pair. So we like to take trades on the smaller time frames, like 15 minutes time frame, as you can see. So let's reset this pair and then come here. So traders, we're going to look out for where would we be taking our trades. So let's zoom into this side. As you can see, so before even I go any further, traders, one of the best signs that I like to look at when I'm taking a trade is this big rejection candle, as you can see right here. So here, if I was to take my trade, my entry would be probably around here below this line, and then my stop loss would be above here. As you can see, that would be my first entry if I was to take this trade right there. Let's see another one. That is one bounce off. Then even right here, this would be a nice trade. As you can see, again, we have rejection wicks right there. This would be another level to take your nice trade right there. Then also here we have a rejection candle, even though price didn't like really give us that momentum, but again we had rejection. I always like to look out for rejection. Then let's see another one. Again, traders, you can see you have strong rejection here. Again, whenever I see rejection like this, I take my trade. The next candle or the candle after that, that is another trade, as you can see. So rejection by wick is one of the best confirmations I like to look out for. It can happen either on the uptrend and downtrend market also, traders. So most of the cases where I don't see like really rejection, I don't take trade. As you can see here, I didn't like really see rejection in here. I just saw a fake out. So here I don't like really take any trade, as you can see. Now for here, again, we didn't have like really much rejection. So yeah, here I don't take a trade unless I see a confirmation. This is the confirmation. You can see right here we have rejection. You can see double rejection, 1, 2. I take my trade and I'll be. So now let's even go to a smaller. Let's go now to a bigger time from like 1 hour and see what did we have. So what do we have on 1 hour? So let's see. Again, on 1 hour we had rejection, as you can see. I would have taken a nice trade right here, as you can see. Then let's see. I wouldn't take my trade here. I wouldn't take a trade right there. I wouldn't take a trade there. I always want to go in with confirmation. I would have taken a trade here. We had a moving engulfing candle pattern here, a bullish one. Like I would have taken a trade there. We have rejection right there. So traders, as you can see, those are some of the confirmations that we would be looking out for, and even there are more and more, but probably those are the ones that we'll be looking out for. But again, when you go back to the daily time frame, you can see that this was our nice market right here, as you can see right here. You can see right there. Until we had the breakout, as I told you, we're always going to be looking out for breakouts and retests. You see? So since I've taken a trade here, price gives me this clear impulsive move. So when I see these big impulsive moves, I already know price is just going to come and retest, and then we see a breakout. When the price breaks out, I always want to see momentum. If it breaks out with momentum like this, I definitely know retest is going to come back in. Then we're going to have another push to the downside. And how do you know that a retest? How far will a retest end, or a retracement? So you use your Fibonacci retracement, apply it from your swing high, your swing low, just like this, and then you wait for price to come back to your nice levels. As you can see, when you had imbalance in here, so price had to come back and fill up that imbalance, as you can see. So it's even at the 0.5 and 0.6 level, as you can see, traders. So we definitely just need price to retest in here. Then we're going to see a push to the downside. Another key thing you can even use is since we see price giving us the nice slope, so you can just apply your trend line, and then when price comes back to your trend line, you can use also that as your confluence, just like this. We apply our trend line from here, connect it to that point, as you can see. As you can see right there. So this is my nice. So right now I don't expect price to suppress my trend line in any way here. So we just need to see a rejection and then price push back, even though price breaks here. But if it comes back and closes below here, we're just definitely going to be looking for sell. So this is now even more confluence. So traders, this is just US 30, and this is the same thing that we had also in USO right here. Now USO, we had the same market. As you can see, we had a ranging market. Again, how do you draw it out? Mark out just like this, as you can see. Mark out the second one just like the same way. Use your rectangle. Use your rectangle just like this. Just like this. And then push it in there. So as you can see, traders, again, we have literally the same thing. Literally the same thing. We have literally the same thing. How do we trade this market? We just wait for price to come to this level, actually bounce off from here to here, here to here. And what am I looking for? Rejection. As you can see, we have rejection here. This would be a nice entry. Also here would be a nice entry for buy. So here I'm literally just buying and selling, but as you're waiting for a breakout, when a breakout happens, you're going to see momentum coming to the play. As you can see, this is a big impulsive. Now price is retracing. How do we know price is going to, how far price retrace? We use our fib from swing high to swing low. So price is into currently our 0.5 level. So we just expect now price to just bounce off from here and go back to the downside. Traders, another thing you should have to consider, sometimes when price is trying to retrace it and comes back into your zone, you can use your Fibonacci as a way to an impulsive move here, how far price play around and then shoot back to the downside. So if price breaks your Fibonacci main levels, then you know, okay, price is not going to go where you expect. You just now to trade with what you what the market is giving you. And always, traders, when you're trading these types of markets, always make sure to wait for price to come to you. Always wait for price to come to you. When you draw out your nice levels like this, wait until price comes to your zone and let it give you what you want. You know, see how price plays out. When you see rejection, when you see reversal candles here or here or here or here, then you can take a trade, but don't force a trade. You know, don't take a trade before price comes to your zone, traders. This is the simplest and most underrated aspect when you're trading the forex market. Most of the traders neglect this, and they'll just come to 1 hour time frame and then they will be confused. You know, they'll be confused. So someone is just here and then seeing things, you know, and then they are trying to, as much as they can, to see how do I trade this, how do I trade this, but they're neglecting the simpler things. You know, always go to your big time frame, identify the trend of the market. Is it an uptrend? Is it a downtrend? Or is it a sideways market? Or is it a consolidation market? And how do we trade the consolidation market? All these things, guys, I'm going to be bringing them in my upcoming videos, traders. So I hope that you have enjoyed and you have learned more from this video, guys. Very simple strategy that I always use, as you can see. And traders, I don't only give you these things, you know, I've traded this. I'll show you. This is one of the best ones that I've traded so far. This is Euro card, as you can see. I'm going to show you. I took a trade sometime back then, but I even up to now I remember, because you know, trades that I have taken and then they are good trades, you can never forget them. So this was the trade, as you can see. Even I still have my box there. You see, traders, this is the daily time frame. This is the daily time frame. You can see right here, daily. You see, we had price doing literally the same thing that I've been telling you. You see, traders, price bounces in between. You see, when I get this first bounce, then I can draw out this and then see if price will ever come and bounce back there. But if price comes back and bounces, you see, I'm definitely going to be looking for buys and sells. When price comes to my upper line, which is acts as a resistance, I'm looking for sell. When price buy, as you can see. So the process keeps on happening, as you can see. And most of traders get worried, thinking price will just bounce off like 1, 2, 3 and then go down. But most of the cases, price can even bounce off many times, as I've showed you, even in all those currencies. But again, price is bouncing off as we are looking for a breakout. And sometimes you can also consider what is the trend of the market. When you zoom out like so much, you know, okay, price is doing this, so that you can have a breakout either to the upper side or downside. But again, you can even see the breakout when it's coming. When you see candles breaking out with much momentum, you know, okay, that's the breakout is going to happen, traders. As we are waiting for price to come back to retest and then, you know, drop even more. Traders, let me show you how much is just between trading in between here. Look, traders, let me show you how much. So let's measure between this box, just this box, traders. This box, as you can see, this is 358 pips. 358 pips Wherever you would put your stop loss, traders, when you're trading this type of market, price wouldn't take you out in any way. Price wouldn't take you out in any way. If you put your stop loss above here and sell, price wouldn't hit you. If you put your stop loss below here and you buy, price wouldn't take you out in any way. Traders, look for ranging markets on bigger time frames, and you're going to be a profitable trader, traders. I hope you have enjoyed this video, guys. I hope you have liked it. Make sure to subscribe, make sure to like, and then let's keep on going, traders. Let's keep on going. I hope my video that I post weekly help you become a better trader. But this is something that I also learn me as a trader, and it's something that I've learned for quite a long time and I've practiced, and then I'm a profitable trader, traders. Being profitable is not an easy thing, but if you can have setups under price action, which is under price action, practice those setups. Whenever you see them, take trades, and then you'll be a profitable trader. But again, guys, being a profitable trader takes time. This is not something that you can achieve in just 1 week. No, all these things take time, traders. Hope you are blessed, and have a good one, traders. Have a good one. Before you even have a good one, look at this. These types of markets happen everywhere. They happen everywhere. Look at this. You can see they happen everywhere. So there's nothing hard, traders. I'll see you in my next.